I'm currently the CEO of a privacy-preserving analytics startup called Enya.ai. I'm also a partner at a venture firm called XSeed Capital, and Enya is one of our portfolio companies, of course.
So just to dive into what you've been seeing now, has there been a trend in terms of how deals are being handled for any like term sheets or letter of intents that have been executed prior to the pandemic? And what has been your experience in handling those specific situations?
Yeah, that's a great question. So fortunately, what I'm seeing is most of the professional, experienced investors, they're honoring the deals. So the deals that are getting done have been in flight prior to the pandemic. In some cases, the term sheet was already in place, or the deal had already been approved by the investment committee. So in those cases, for the most part, professional investors are still honoring the terms.
Yeah.
We have seen in small number of cases where corporate venture arms might have walked back because the mothership might need to conserve cash, or when there are layoffs happening at in the headquarters, from the optics standpoint, they may not want to be seen as still throwing money at speculative investments. But for the most part, if you're dealing with a professional venture firm, then they're still honoring the deals and signing term sheets.
With everyone working remote now, I think it's been a month now and everyone's kind of adjusting, but has that changed in terms of the diligence process, the negotiation process? Has it been tough to get people's attention, or have you not seen very many changes in terms of the transaction process?
Yeah, that certainly changes. On one hand, everything is done over Zoom now, over video.
Yeah.
And in some sense, it's easier to get people's attention because there's less overhead to having a meeting. And Zoom meetings on average are shorter than in-person meetings anyways. The expectation is just different.
Yeah.
And there's no commute. So it's easier to get on people's radar screens, but it's harder to close deals. Especially in the case of investing in a startup, these investment relationships last a long time if the company is successful.
Yeah.
It takes more than 10 years on average to go from zero to IPO these days. And therefore, investors in general want to meet founders in person more than once before they commit. But now they pretty much can't. So that also contributes to a slowdown in investment pace as well.
Yeah, I was going to say, I recently read an article about how it's been really hard to make that personal connection because you can't really meet in person, and sometimes via Zoom you can't build the same connection or relationship with the person. So that's an interesting point to consider with the pandemic. Have there been any changes in terms of contingency plans or changes in the way terms are negotiated because of the pandemic?
I think that's mostly reflected in the kinds of valuation around size that a company could command compared to maybe before the pandemic started.
Yeah.
Just because during the current environment, if you are pitching to investors, and even if they're interested in investing, in general, the sentiment has become a lot more cautious. As a result, the bar is higher.
Have you seen kind of a trend in terms of specific industries that investors are now pursuing, or has the planning for any future investments kind of stayed the same?
I think for the most part, investors are still focused on the areas that they're excited about, and also where they have expertise, domain expertise. Areas like machine learning, AI, enterprise SaaS, cybersecurity. These trends are not going to stop just because we have a pandemic right now.
Yeah.
Now, are there new areas that are catching investors' interest, or that might make these companies even easier to raise money in the current environment? Definitely, if you're working on anything that enables remote work, right? Be it from sourcing talent, team management, managing distributed work, communications, just making the whole experience much more seamless and much more cohesive, helping companies build and maintain a strong team culture, company culture, while everyone is working from home. I mean, those products I think are having a great time, because even after this crisis is over, I think certainly people will start working in the office again because we still want to get together. But the level of work that is being done from home, I think, will settle at a level that is higher than before. just because more people and more companies, more teams are now more comfortable
Yeah.
working remotely in a distributed way.
Especially with the consideration of investments in these types of companies that make it really easy for people to work remote and collaborate remotely. What are some, I guess, like transformative or digital strategies that these companies need to focus on to attract investors? Because I know sometimes, like from an operational standpoint, it could be really difficult to collaborate with your team. There's a lot of risk associated with these types of platforms that connect people. Are there specific areas that you're focusing on when you're looking into these investments?
That's an interesting question because prior to this crisis, venture investors already started paying attention to whether a company has a distributed team strategy. Not from the standpoint of assessing the risk of working in a distributed fashion, but more from the standpoint of, do you have a capital efficient way to scale your organization instead of, as opposed to hiring everybody in the Bay Area. Because it's a really expensive place and salaries are high, living costs are high. And as a startup, you're going to be competing with the likes of Googles and Facebooks to compete for talent. And it's just super hard. But if you have a solid talent strategy outside of the Bay Area in more cost-effective places where there's still strong talents, then you stand a better chance of raising venture capital and also be able to stretch the capital that you raise that much more. You have a longer runway as a result. And I think in the current environment, that will become even more of a focus. Like, does your company culture lend itself to operating productively in a distributed way?
Yeah, that's a good point. What are some practical tips or steps that you would give a company who is looking for potential investors in the current market?
Start building relationships early with the partners that you want to work with, the investors that you want to work with. All else being equal, people are going to prefer investing in folks that they already know and trust. That's always been true. And it's especially true in the current environment where your interactions are mostly over video. And if you don't already have a trusted relationship, then you got to do that much more work to close that gap. But if you already have those relationships, then it's much easier. If you're starting these new conversations now, today, then really put the focus on figuring out which investors are going to be the best fit for you potentially. When the shelter-in-place orders are lifted and we're allowed to meet again in person, you want to be in a position where you're not starting from square one. You already have a basis to build on, and you'll be that much farther ahead than others who will be starting from scratch when that happens.
And then my last question for you is, what do you find valuable or helpful when working with your outside counsel?
That's a great question. So I'll speak to it from both an investor and an operator perspective. As an investor, I think corporate counsel, similar to us, we both see a lot of companies. So comparing those across the industry, across different stages, different sectors, having that market intelligence available to us is really helpful. Also looking at what are the common terms being negotiated in term sheets? Are there any changes one way or the other? Knowing that is also super helpful. As an operator, definitely I want to work with corporate counsels who are knowledgeable, responsive, turn on a dime. I really lean on my corporate counsel for advice when it comes to not just legal matters, but certain aspects of strategy where the exposure that they have with the rest of the industry, similar to the investor perspective, where they see a lot of different companies at different stages, right? And so knowing what's going on out there while I'm focused on building my company really helps to eliminate some of the blind spots I may not be aware of.